So let's
Thanks,
just
Lara.
focus on the US side of things. We'll have a discussion about Brexit later. It's a big political risk hour for us today. So what we've heard about the impeachment inquiry in the US, does this make you feel any more negative about US equities?
Well, I must admit, an impeachment inquiry is not going to be solved overnight. This has been a long time already in discussion from the Democratic side. So this is something that will just add another uncertainty to the future political events leading up to the election next year. So as far as our view on US equities is concerned, in fact, we're actually quite favourable, not for those companies that are very close to the cycle, because as we can see, we are at the end of the economic cycle in the US, as we can see by some of the data that's already coming out, particularly now, including consumer. So we're happy still to stay in those companies on the internet side, on the communication services side, and healthcare, and they're the companies where we can see some good solid growth, secular growth, good earnings, innovation coming in, and increasing market share for some sides of some of the companies on the communication services. So there's lots still to invest in the US equity market.
Yeah, in terms of healthcare, I know this is one of your preferred sectors. I mean, you've got some out there, Goldman, for example, warning that you should put some protection on because of the rising popularity of Elizabeth Warren. Is that something that you're thinking about at this point?
Absolutely, we've been talking about it, but we're quite diversified in our healthcare sector. If we were solely invested in pharmacy, I think that we would be taking a more action. But we're invested in healthcare services. We are wanting to invest in companies that are accompanying the ageing population, hence those healthcare services, but also in life sciences, new innovation. So we're quite broad across the spectrum. Again, we would stay away from a portfolio that would be purely focused on pharma, because I think there is some risk for new legislation going forward.
And in terms of portfolio protection as well, do you offset your preference for US equities with also holding some US Treasuries?
We have done over these last few months, but today we're not particularly interested in holding a lot of modified duration risk inside our portfolios, because we've seen massive moves in the bond market in the last 3 to 6 months, depending on which country. And it comes to, we believe that at this particular point in time, being so close to the end of the cycle, it's very hard to find the pivot point when activity will start to increase. But we find that the bond market has moved quite rapidly, and it's quite dangerous to be in mid to long-term yields at the moment. And we actually would prefer to have a steepening trade on in the US rather than outright long positions in US T-notes. Actually, today there's a very, very large position in the US banking portfolios of T-notes. And it's costing them. We aren't allowing with the inverted yield curve for them to be able to finance these bonds very easily with higher short-term rates. So because of that, there may well be some selling of T-notes in the future as they start to reduce their holdings. The US banks reduce their holdings. So that's another fear of ours, why we wouldn't want necessarily to be long the long end of the US rates, but rather having positions in curve steepness in US rates.
Yeah,